Every once in a while, I do a video trying to assess the valuation of the stock market, looking at different opportunities, looking at some macro factors, and try to determine if this is a time we should be extremely fearful in the market, or this is a time we should be extremely greedy and we should just be buying every single dip. Well, pretty much around 4 weeks ago, whenever the S&P was sitting around 4,200, the fear and greed index was sitting at extreme fear territory. People were calling for another crash. This is what normally happens at the bottom. And I did say I'm seeing amazing buying opportunities. And I said retail investors are fearful when they should have been greedy. And it was a pretty amazing buying opportunity. Well, now I see the exact opposite after the S&P is sitting pretty close to 4,600. Now, a lot of the major banks, as you could see in this graph, they have a lot of different targets. Some of them have 5,000, 5,100 by 2024. I mean, they're never right. They always have these kind of crazy targets. It might happen, it might not happen. But I'm just saying a lot of overvaluation in the market. My main thesis for being extremely bullish was comparing the Magnificent Seven to the remaining 493 stocks. And this is where I've been investing. I've been staying away from the Magnificent Seven, and I've been investing into REITs, into other kind of companies from the 493 stocks that have yet to catch up. And I said that there's plenty of opportunities in the market. The market in general is not overvalued. It's just the Magnificent Seven. But this has recently started to change because a lot of the stocks that we talked about on the channel have started to catch up. Something like Realty Income is up 9% in 1 month. Something like Ulta Beauty, which I talked about so many times, and people troll me on it, but they can't even wait 2 months. The video on Ulta is like 3 weeks old, and they tell me, oh, this video did not age well. I'm like, it's only 3 weeks old. I mean, can you be a little bit patient on such thesis? Well, the stock is now up 24% after the company destroyed earnings estimates. Hims and Hers Health, which I recommended as an alternative to Palantir in my 2 growth stocks to consider video. I said it's much better than Palantir. It's now up 45% in 1 month. Something like Crocs, which I said it was a low PE ratio, was sitting at 7 times earnings or 6.5 times earnings. Well, now it's up 29% in a month. So I've been struggling to find value in the market. I'm struggling to find stocks that have yet to catch up. Most stocks are catching up, even 3M. I mean, 3M is an absolute trash of a company. I've been pretty bearish on this company. And it's even 3M is starting to catch up to the Magnificent Seven. So the market overall is starting to get expensive. I'm starting to see more greed in the market, not as fear as I saw before. So a lot of the other stocks are now starting to get fairly valued to pretty close to overvalued. But you also have the Magnificent Seven, in my opinion, which are still extremely overvalued. I know some of you might not like this, but something like Microsoft is still sitting at 34 times earnings. Now the 5-year average is something like 29 times, and it was mainly a massive multiple expansion because of AI and then, all these kind of AI opportunities, which is maybe warranted, and it's likely going to give something like Microsoft higher earnings growth. But if we look at the earnings growth for something like Microsoft, I mean, it used to grow around 17 to 18% in terms of revenues. It's now growing around 14%. It's expected to grow 13 to 14%. So the revenue is pretty much a little bit lower than it was before in terms of growth. They do have higher net income margins. Net income margins went from 29% to 34%. So this warrants a higher multiple. But over the last 5 years, Microsoft traded as low as 21 times and as high as 36 times with a mean of 29 times. Well, if Microsoft just reverts back to the mean of 29 times, this is not going to happen before June of 2025 based on something like 15% EPS growth, which is a very high estimate. So something like Microsoft could be flat for 1 to 2 years. Plenty of other mega cap stocks, in my opinion, could be flat between 3 to 5 years because a lot of them are extremely overvalued. They are priced like we're at 0% interest rates. Microsoft is priced at 0% interest rate. Unless whenever Powell cuts to zero, Microsoft trades at 50 times earnings. I mean, that would be extremely impressive, and it could still happen. I'm not saying it can't happen, but I'm saying a lot of these stocks have been priced to perfection. I'm not saying Microsoft is not an amazing company. I'm not telling anyone to sell Microsoft, but I'm just saying the stock is priced to perfection in terms of the Magnificent Seven. And I saw opportunities in the rest of the market, but all the stocks I talked about are up 20, 30, 40%. And I'm not seeing as many opportunities as I've been seeing before. And most of this rally has largely been due to lower inflation, mainly on the core PCE month over month. It has stabilized between 0.1 to 0.2. This is very bullish for the market. The 10-year has started to come down. It's now at 4.3%. Many people believe that we're going to go to 7,000 if we go back to something like 3%. I mean, this is possible, but I think the market has most likely priced a lot of that stuff in. I mean, for me, looking at Microsoft, many other mega caps except Google. Google is still the most undervalued mega cap in my opinion, but most of them have priced in pretty much the best case scenario. For example, something like Microsoft, again, if Microsoft does not experience a multiple contraction, I'm seeing a return pretty close to the EPS, which is something like 13 to 14%. It's still an amazing return for Microsoft, but I think the multiple expansion story is done to most of the stocks in the S&P, the Magnificent Seven. The remaining stocks we talked about have started to catch up. They're still a little bit undervalued to fairly valued, but it's becoming harder and harder to see opportunities. But if the market is overvalued, it doesn't mean that we're going to crash in 2 or 3 months. It could still happen, but this is not enough for me to call for a stock market crash. I think a lot of people always claim that the market is overvalued, so we're going to crash. Normally, you need a catalyst for the market to crash. And the catalyst could be maybe a reacceleration in inflation, and this would cause the 10-year to go up much, much more. And then this way, Powell might have to hike a little bit more or maybe keep it higher for longer. And this would be bearish for the market. But anything else, if we don't have anything major breaking, I'm not really saying what could really cause the sentiment to reverse. We're not going to reverse just because the market is overvalued. There normally has to be a narrative, and I'm not really saying the narrative so far. But with the VIX sitting at 12, I mean, this is extremely, extremely low. I talked about how the market normally bottoms whenever the VIX, the volatility index, hits 40. It pretty much did it in March 2020, it did it in 2008, it did it in the 99 dot-com bubble, kind of stock market crash. We haven't done it in 2022. We got to like 37 or 38, but now we're sitting at 12. So normally at 12 VIX, I mean, puts are normally free money. I mean, I would be hedging whenever the VIX is at 12 or 11. I mean, it could still go to single digits, but the likelihood here is that we're going to most likely have a reversal, and there's not so many opportunities in the market as much as we had whenever I made this video and I said, I mean, people should be greedy when they're fearful. I think people now should be more fearful than they should be greedy. It doesn't mean there's no opportunities, but they are very, very few. And there's a lot of greed, a lot of FOMO in the market. I think the most likely scenario is we just reverse and then we retest this trend line, something like 4,300, and then maybe we rebound from 4,300. I'm not a technical analyst. I'm not trying to predict the market, but this is what I believe is the most likely scenario. But I would not be extremely greedy in this situation. I'm not being greedy in my own portfolio. I have some stocks I bought. I'm not buying anything pretty much right now. I'm just analyzing a few stocks. There's just a lot of greeds, and all the opportunities are pretty much gone in my opinion. And I'm really struggling to find opportunities. Whenever I'm struggling to find opportunities and I screen a lot of stocks in a lot of markets in many different countries, I normally feel that the market is overvalued, and I tend to be a little bit more conservative than being as greedy as I was whenever the S&P went down to low 4100s. So this was my opinion on the market, if it's undervalued or overvalued, and what I'm doing in my own portfolio. So if you enjoyed it, please press the like button. It was not fresh advice, and maybe consider subscribing. So I hope to see you in another video.